So please welcome Yza Canja. She is a finance and property expert, and she's here today to talk about, funnily enough, property and finance. G'day, Yza.
Hi, Carls. How you going?
Good. Yeah. So I want to just have a little bit of a chat with you. Obviously, now we're in the beginning of 2011. We are in a different finance market and property market than we've seen probably in the last decade.
Yeah, absolutely.
We've come through the GFC now. Would you say we have come through it?
We have come through the GFC. I mean, it has its little stigmas that are lingering behind, but we've come through it, but it's still very, very fresh in everyone's minds, the individuals and with lenders.
So when you say with lenders, have they changed their criteria?
They have loosened up a little bit as compared to the way they were during the GFC and just after the GFC. So we are seeing lenders come back into the market. They are giving the impression of loosening up some of the restrictions that they put on during the GFC. However, I would take that, I wouldn't take that at face value. It's not like they've opened their arms up completely and said, come here. I mean, at the moment, we're going through a little bit of a bank war. I don't know if you're aware of that.
A bank war?
Yeah.
There's
a bit of a tug of war at the moment.
I don't know what that means.
Well, the banks are going through a pricing war right now. They're hollering, we can do a little bit cheaper. We'll do it here. We'll do it there.
Yeah. But that's normal. That feels like every time I turn the TV on,
absolutely,
there's an interest rate hike, or there's an interest rate change, or there's it's always on the news.
Absolutely, but right now they've made a thing of it. So the impression for the average person out there is, oh, well, maybe it is a lot easier. And whilst things have loosened up, so there's more flexibility to borrow right now, it doesn't mean that the banks have let go. They haven't forgotten about what's happened in the GFC. So whilst their policies have loosened up, their checks and balances are stronger than ever.
All right, I'm going to ask you some specific questions. Let's talk about LVRs. Explain for me, what is an LVR?
An LVR stands for loan to value ratio. So basically, it's the percent that you borrow against the value of the property you're offering as security.
So what if a property's worth $1 million and they're going to lend me 70%? Then
you're borrowing
the LVR is 70%. Is that right?
Correct. Yeah.
So it's basically the bank's risk level?
Yeah, well, it's the way banks will, or rather, their risks levels are determined by LVRs.
Okay, so you used to be able to borrow, and I mean, not always, but 110%.
Yeah, you could do very well.
These days?
No, you're not going to get
90%?
110%. You can get 90% on residential loans.
Higher interest rate though?
No, not necessarily a higher interest rate. So
okay,
that's what's really good in this market. In fact, during the GFC, up until a couple of months ago, or a few months ago, banks were not doing anything above 90%. So they used to be able to lend 95. If you had mortgage insurance, you could capitalize that on top. So essentially, they were lending 97%. Then that dropped back to 90% in some cases. Other banks just dropped to 80%. Now banks have come back and saying we've reintroduced that loan. You can borrow up to 95% again.
Right. Okay.
Yeah.
So they're starting to bring back some of those products that are making it easy for the full market to borrow.
That's right.
Okay. What about construction finance, development finance, which is something that I'm personally interested in? Has that gotten tougher?
Yes, it has.
Yes, it has.
It probably hasn't loosened up.
It's tough to get money right now.
Yeah.
It really is.
Yeah.
And I mean, they want more criteria. They want higher interest rates.
That's
They'll
right.
lend you less. They want more security.
They want more pre-sales.
Okay, so what do you do if the deposit you have and what the bank's going to lend you, what if there's a gap in between? What do you do?
You're going to need to start getting creative, and you're going to have to get creative before you've even approached the banks. You need to know how you're going to fill that gap. You can't go to the bank and say, well, here's my deposit, you're going to lend me this, and can you help me find a solution for that gap? You've got to be proactive about finding that gap beforehand. So you can go to, you can look at other options that, such as private investors, private funders, in some cases mezzanine finance as well. You basically have to have that solution before you apply for the rest of that construction finance. Otherwise, the bank's going to say to you, don't waste my time. Like, you don't even know how you're going to complete this deal. Don't waste my time. The bank will say it's not their job to make sure that you get that deal done. There are so many deals out there, they only have a limited amount of money. They're going to give it to the deals that are most prepared and the less risky.
Right.
Yeah.
Right, okay. So So when you talk about creative financing, would vendor financing be one of those options?
Vendor financing,
what is
definitely. So vendor financing is where the vendor leaves a part of their equity in the deal. So for example, your purchase price might be $1 million and you say to the vendor, I'm happy to pay you $1 million. In fact, I'll pay you a little bit more, but what I'd like to do is only pay your portion up front. So right now at settlement, I'll buy the property from you. We agree that I pay you, let's say, 1.1 million, and I'll pay you $800,000 now. I'll give you the remaining 200,000 plus the extra 100,000, so 300 grand after the deal is done, or after I've completed the whole project.
Right. Now, I do hear from people about vendor finance, they're scared of it. They think it's unusual. What is your opinion of it as a broker yourself, someone that's in the finance game?
Yeah.
Is it unusual?
Well, it's only unusual for I guess unseasoned investors.
Is it legal?
It is completely legal.
Right.
It's completely legal. There's nothing for you to worry about along those lines. Are there risks involved? Well, yes, there's a risk involved in every single deal that's out there, but it is not an uncommon transaction. It does happen quite regularly, particularly with the astute investors, because astute investors don't want to put as much money, or they'd rather keep their cash flow to make sure their deals go ahead with their construction rather than put all their investment in up front.